Friends, welcome to our today's session. In previous sessions, we have understood some basic concepts, and we know that every person whose total income of the previous year exceeds the maximum amount which is not chargeable to income tax is an assessee and will be chargeable to income tax at the rates prescribed in the Finance Act for the relevant assessment year. So this is the concept we are discussing. Right. And in that context, we have already understood what is the meaning of person. Okay. I think all of you are aware the person means it is an inclusive definition. Of course, there are 7 category persons. Okay. If you recall, will you try to recall? One is individual, then.
So HUF, Hindu Undivided Family, then form includes limited liability persons, then associations of individuals, associations of persons or body of individuals, then company, local authorities, artificial juridical persons.
Very good. So these are the 7 category of persons we have understood, and all of them are liable to pay tax. And also we have understood one more concept, that what is taxable is the total income. And total income means why a person may be having various sources of income. Okay, there might be any number of sources, but we can group all these sources of income into 5 heads. We refer this thing as 5 heads of income. Right. So 5 heads of income, if you recall, there first one is salaries, second one is
income from house property.
Income from house property. Third one,
profit from business or profession.
Profit and gains of business or profession.
Fourth, then capital gains, then income from other sources.
Very good. Fourth is capital gains and income from other sources. Fantastic. So these are the 5 heads of income. Okay, there might be many sources, but heads of income, coming to heads of income, there are only 5 heads of income. Right. And under each head, there are various ways or different ways by applying different methods. So you'll be computing tax under the head salary. Okay, under the head, let us say income from house property, or under the head profit and gains of business or profession, or for capital gain or income from other sources. So we'll be applying those principles, those methods, and we'll be computing tax under different heads. Finally, all those incomes is to be aggregated. Okay, after aggregation, 2 things has to be applied, or the concept has to be applied. One is clubbing provisions. If some other incomes needs to be clubbed, that also is to be clubbed here. And setup of carry forwarded losses. If earlier years there are some losses which was supposed to be carried forward, that may be set off in the current year. After that, we'll be getting a figure. That figure will be called as GTI, or gross total income. Right, aggregate of income generated all these 5 heads plus whatever result you are getting after applying clubbing provisions and the provisions of setup of carry forwarded losses. You'll be getting gross total income. From that gross total income, what you will do? Then one more thing is to be applied. That is Chapter 6.
Deduction.
After application of Chapter 6 deductions, you'll be getting the total income. Okay, that total income is relevant for us because we'll be applying our tax rate on that total income. Okay, friends. And this total income also is to be computed. How it is to be computed, or what are the incomes to be aggregated under total income? That depends on residential status. We'll be learning the concept of residential status after some time. Okay. Now today what we are doing, having understood what is total income and what is this thing, what are the types of assesses, and we know what is assessment year, previous year also. Okay, income earned during previous year is assessed in the subsequent year, which is called as assessment year. That concept you know. Okay, normally income is assessed in the subsequent year, but there are exceptions to it. We have seen 5 exceptions. Have you remembered? 5 exceptions are there, where income earned by the assessee during the previous year can be assessed in the previous year itself. Okay, like non-resident shipping company. Okay, some examples you have seen. Person who is living in India permanently or for a long period of time. So these are some examples in the previous session we had discussed. Today, friends, we'll be focusing first of all, to understand what are these rates of tax. That means once we know what is the total income, now next thing is that we need to know what are the rates of taxes. For that thing, first of all, let me take you to the income tax department's website. So we'll referring to the rates and charts. That is the original source. Then I'll be showing you my PPTs. First, let me take you to the department side. Give me a moment for that. Yeah, friends, you are seeing now Google Chrome browser.
Yes, sir.
Now you see, I'm taking you to this site, income tax, not income tax.gov.in, incometaxindia.gov.in, incometaxindia.gov.in. Okay. So let me enter. Let me take you to the home page first. Yeah, you are able to see department's home page.
Yes, sir.
Yes, sir.
Okay. Friends, I need tax rates. Please suggest me where should I go. I need rate of tax for different kind of persons. Any idea where should I go?
So can you repeat the question once again?
Question is, I am looking for what are the rates of taxes of different kinds of assets. I am showing you the home page. I am asking you where I should click. That means what is the link through which I can see rates of taxes.
The tax charts and tables, I think.
Very good, very good. So you see here there is a link, tax charts and tables. You can refer here. I can understand what are the rates. Okay, I can find the rates from the Finance Act also. If I see the Finance Act, but not necessarily this is easier to go here. Through these tax tools, I can also calculate the tax amount, but rates will not be there. So let me go here, tax charts and tables. Okay, friends. If I click here, I'll see a list of charts or tables, and I am looking for tax rates. So now we can easily find out about the tax rates. Is it not? Are you seeing it here? Oh, this part.
Yes, sir.
Yes,
Tax
sir.
rates. What it is, different tax rates have been provided, various categories of taxpayers for different sources of income, like individuals, HUF, POP, BOI, different rates are there. So if I click here, I can get a fair idea about the tax rate. Now you see. First, you are seeing the tax rates for individuals. This is for resident or non-resident both. Then HUF, AOP, BOI, okay, and other AJPs. For them, you see the tax rate. Okay, are you seeing about this tax rate? So this is called as the slab rate. Slab rate in the sense, up to certain income, you see, there is no tax. That is called as the basic exemption limit. Below this bold, above this bold line. Okay, this is basic exemption limit for individuals is how much? Or the maximum amount which is not chargeable to tax is how
Sir,
much?
2,50,000.
2,50,000. Now we are referring to assessment year 22-23. Okay, friends, assessment year 22-23. That means whatever income that one individual is going to earn in the financial year 21-22. That means current financial year 21-22. That will be assessed to tax in the assessment year 22-23. Okay, the 22-23 assessment year will start from 1st April 2022. Okay, today we are in the month of January, but in April 1st, this assessment year 22-23 will be started. Okay, in that assessment year, which income is to be assessed? Income earned during the previous year, and the previous year is 21-22, starting from 1st April 2021, ending on 31st March 2022. Okay, friends, this is referred to as slab rate. Slab rate means what? You see, up to 2,50,000 nil, above 2,50,000 to 5 lakh, that is 5%. And above 5 lakh, up to 10 lakh, that is 20%. Above 10 lakh, what is the income? 30%. Remember,
Yes, sir. Yes.
Okay, remember? Okay, fine. If you have remembered, now just tell me. Let us see your understanding about applicability of slab rates. Just give me a moment. Let us assume someone is having income of 12 lakh. Just tell me how much tax he has to pay. Give me a moment. Yeah. Here is a normal individual, not a senior citizen, we are saying. And income I am talking about 12 lakh. Can you tell me, this is his total income, how much tax he has to pay? Rough calculation, you tell me. What will do up to 0 to 2,50,000? What is the tax rate? Nil.
So 0. Nil. Nil.
Nil. So tax is also nil. Okay, tax is also 0. Now, above 2,50,000 to 5 lakh. How much?
5%.
5%. 5% means how much? Can you calculate? 5% of what you are going to calculate?
So the 5% of amount earned, that is 5 lakhs.
So you feel it is the 5% of 5 lakh?
No, sir. Like from 0 to 0.5 lakh, it is nil. It is exempted. From 2.5 lakhs to 5 lakhs. So
Yeah,
that remaining 2.5 ka 5%.
okay, so on this 2.5 lakh, for this difference, you will be calculated that. Okay, so here the tax rate will be 5%, but 5% of this year, because first exemption limit is over. So next is 2.5 lakh to 5 lakh. This gap is 2.5 lakh. On that thing, 5%. It comes to 12,500. Right? Now
Yes,
the
sir.
next is 5 lakh to 10 lakh. How much is the tax rate? What is the rate of
20%.
20%? So 20%. Please calculate here. 20%. So 5 lakh to 10 lakh. This gap is 5 lakh. On that 5 lakh rupees, 20% of that. So how much it comes?
So 1 lakh.
1 lakh. Next, what will be the slab rate? 10 lakh to. The person is having total income of 12 lakh. So 10 lakh to 12 lakh. On this 2 lakh, rate of tax is 30%. On this 2 lakh, 30%. How much it is?
60,000.
60. So total tax, how much? Tell me.
Sir, it is coming around 1,72,500.
1,72,000. Okay, so this is the income tax one has to pay. Plus, there is one more thing we'll be learning. That is called as the health and education cess. This will be calculated 4% of the tax. How much it is? 1,72,500. On that, you will calculate 4%. 1,72,500 into 4%. If you calculate, it comes to 6,900. So another 6,900 rupees is to be added. Now tell me, what is the total amount payable?
So we have to deduct the 6,900 from the 1,72,500.
You have to add it.
Oh, sorry. Okay, add it. So 1,79,400.
So 1,79,400. Now understood application of slab rate?
Yes,
You need
yes,
to
sir.
find out the total income, then apply. This is the slab rate you see. Okay. Now I'll be telling you one more shortcut approach here. You see, you can also do that thing. Let me again take you to that place, income tax department's website. Okay. So this is what I was showing you. Like I'll take you a little back. I'll be again, I'm taking you to this home page, right? In this home page, I'm showing you. Can you see here? One link is there.
Tax tools.
Tax
Yes,
tools.
sir.
Here you can go there. Okay. One more thing you can see here. Can you find it here? What is written here?
Tax calculator.
Tax calculators. Okay. Let me take you to tax calculators. If you go to the tax tools, there also you can find tax calculator link. Now you see, are you seeing here? So many types of calculators are there in different pages. Calculation of medical facility like this. Okay. Transport allowances, all these things you'll be learning. House rent allowances, how much is taxable, how much is exempt, we can find it out. But now we are interested in this calculator. Are you seeing it? Tax calculator?
Yes, sir.
Okay. This one. So let me click here. Okay, this is, you see, a fantastic calculator that we are going to use. The advantage of calculator is that you already know what is the advantage. That means you know what is, you may not be, that means you can manage without knowing what is exactly happening at the back end. Suppose you are applying a calculator, you know what, even if without knowing the process, you'll be able to do it. For example, suppose you don't know how to find out the square root of something, but if calculator is there, you can do it, isn't it? Similarly, if you do not know what are the rates of tax and you don't want to remember that thing, then also no issue. Tax calculators are there. Very easily you can find out the tax rates, tax amount. Okay. Now you see the use of this calculator and you have to guide me how to do it. Now it is first question it is asked is about assessment year. Which assessment year I should select?
21-22.
So let us say 21-22 you may select 22-23 also. Okay. As you said, we are selecting 21-22, or let us select 22-23, future assessment year. Okay. And who is the taxpayer? Let us assume taxpayer is an individual or anything you can assume. But right now we are only covered the individual tax rates, individuals. Here there is a question whether opting for taxation under 115 BAC. What is this 115 BAC? We have not yet learned. I'll be telling you after some time. This is a new scheme. Under this scheme, tax rates, what I showed you, are not the same. Tax rates are different. Tax rates are lower. Okay. And assessee can pay tax at a lower rate. But if a person, if an assessee is opting this option, he will not be eligible to get some rebates and some deductions. Okay. So therefore, one has to be careful in selecting this option. So right now we are saying no, is not opting the new scheme. You will go for the scheme that we are learning here. So let me give the option no. Understood? No means you are going for the normal scheme, not the new scheme. Okay, friends?
Yes, sir.
Yes,
Now,
sir.
next question is that you have to answer the what kind of assessee is the male, female, senior citizen, super senior citizen. You will be knowing that tax rates are not different from male and female. But for senior citizen and super senior citizen, tax rates are different. We'll be learning that. So let us say we'll take only normal male. Okay. Or you can take female also. Answer will be same. You may take female also. Now, what is the residential status? You know, the total income depends on the residential status. Okay. So for the time being, we'll assume the residential status is resident. Okay. And in the example we have calculated, I showed you, we have taken the total income is 12 lakh. Okay. I wrote 12 lakh rupees. Fine. Now, if you press enter, you see what is the calculation. Okay. Is it same that we have calculated?
Yes, sir. Yes, sir.
So now you see it is very convenient now. Without
Yes,
knowing
sir.
tax rate also, you can all that you can do. Suppose it is not 12 lakh, it is something and any amount you can put 56 lakh 300 314. Okay, just press enter, your calculation is ready. Are you getting?
Yes,
So you
sir.
can check your
Yes.
calculation.
Yes,
You
sir.
can check your calculation. Any amount you can put,
Yes.
any amount you can put. You see, this is below 5 lakh, therefore it is nil. I will see showing you that thing later on. So let us say 25 lakh. You see, any amount you put, you can find out what is the tax. What is the tax amount, you can find it. Do you find it helpful?
Yes, sir.
So practically for tax calculation, you need not ask anyone. Rates, you know where the rates are there, you can use it, or tax calculators are readily available for any kind of assessments, not only for individual. You see, for any kind of assessments, you can select, you can find out the tax, you can find out the tax amount. Okay, friends, now let us go back again. Let us go to our tax rates and charts. Again, I am taking here to tax rates, tables and charts. You see here, tax rates. Now you have seen for assessment here, what is the normal tax rate for individual CTF? Now you see, again for assessment year 22-23, this is, you see, person who are of 60 years or more at any time during the previous year. They are called as the senior citizen. Who is a senior citizen? Anyone who has attended 60 years or who is of more than 60 years on any time during the previous year. Okay, understand it carefully. At any time during the previous year. But that means what? That means if someone is a senior citizen or attended the age of 60, even on the last date of the previous year, on 31st March, he has attended age 60. Then also he will be a senior citizen for the entire year. It's not proportionately. Tax slab will not be, or tax rates will not apply on that basis. That means on any time, if he has attended the age of 60 years, then tax rates will be different. Is it clear to you?
Yes, sir. Yes, sir.
Yes, sir.
Okay. Now you see, if the person is of 60 years, then what is the rate? Up to 3 lakh, nil. Then 3 lakh to 5 lakh, you see, 5%. 5 lakh to 10 lakh, usual 20%. Above 10 lakh, 30%. So what is the difference between these two slabs? Can anyone tell me what is the difference between normal citizen and the tax rate applicable to senior citizens?
So the minimum, the slab rate is like more like in for normal individuals it is 2,50,000, but
Okay.
here a 50,000 excess is given. We can say as relaxation.
Yes. Here you see the basic exemption limit here is 2,50,000, but here the basic exemption limit is 3 lakh. That means if someone earns 3 lakh rupees and is a senior citizen, he will not have to pay anything. But here the limit is only 2,50,000. Above 2,50,000, he has to pay tax. Is it clear to you?
Yes.
Yes.
Now, next you see here. Can you see it? What is written here? Will you please read it?
Who is 80 years or more at any time during the previous year.
Yes. So here earlier you have seen 60 years. We call it the senior citizen. If someone is attending 80 years at any time during the previous year, we'll call that person as very senior citizen or super senior citizen. Okay. If super senior citizen, you find that up to 5 lakh, is there any tax?
No, sir.
No. Then for above 5 lakh and up to 10 lakh, what is the rate? Above 5 lakh up to 10.
20%.
20%. And above 10 lakh, what is the rate?
30.
30%. Okay. So you see there are only
30%.
two rates, either 20% or 30%. Up to 5 lakh income is exempt for super senior citizens. Understood? Okay. So if you want, you can check it here. Again, I am taking you to this tax calculator. Okay, here I can go here also tax tools. Here also I can find out the same tax calculators. Tax calculator. You can find out, let us say for assessment year 22-23, my taxpayer, let us here I am thinking of an individual, and here opting for 115 BAC, where my answer is no. Male, female, senior citizen, I am choosing here as the senior citizen. Okay, senior citizen. And you see residential status is, let us say, resident. And you can find out, okay, if you put any income, it will be calculated. If you check it, let us say your income putting same 12 lakh rupees, you'll find the rates will be different. Amount of tax will be different. Why it is different? Because how the system calculated, up to 3 lakh rupees, there will be no tax. Okay. Then after 3 lakh up to, are you getting me? 3 lakh to 5 lakh rupees, 5%, 5 lakh to 10 lakh rupees, 20%, above 10 lakh rupees.
Yes, sir.
Okay. So you see rates are. So instead of senior citizen, if I am making very senior citizen, you see the amount will be further reduced. Writing super senior citizen, you see. Now it comes to 1,66,000. Okay. Got it?
Yes, sir. Yes, sir.
Tax slabs, you have understood how tax slabs are applied. So now you see, one can, very simple tax planning is that if someone is having the business, if the business can be run in the name of the senior citizen of the family, then you can see without doing anything, automatically also tax can be reduced. Okay, just by taking advantage of different slab rates for different type of people. Possible or not? If that option is there. Yes or no?
Yes, sir.
Okay, so a very simple tax planning one can do like that. Now,
Sir, sir, I have a doubt.
please.
Sir, in board you have calculated and the total is 1,72,500. So I'm not able to understand the 4% one. Why 4%?
Why 4%?
Yes, sir.
Why 4% extra? 4% extra is, you can say, another cess which is levied by government in addition to income. Okay, that is another kind of cess. Cesses are levied for some specific purpose. The additional 4% is levied for health and education purposes that will be separately collected by central government. Okay, we'll be learning that.
Sure.
Additional 4% is again in addition to income tax that will be collected.
Okay, sir.
Okay, that is not income tax, that is health and education cess, but that is collected along with income tax. Okay.
Yes, sir.
Yes,
I
sir.
have a doubt too.
Yeah, please now ask your doubt.
Yes, sir. So in the tax calculator, when it comes to the residential status,
Yeah.
there is an option of not ordinary resident.
Yeah.
Not ordinary resident. So,
Okay.
so
So friends, we have not yet learned
what
what is the meaning of not ordinarily resident, and I'll be learning that residential status. When I'll be teaching you the residential status concept, at that time you'll have some idea that certain kind of assets, like individuals, may have option. They become a resident, non-resident, or not resident but not ordinarily resident. There is one more third category is also there, but we have not learned it there. If at this stage you want to learn, then you may visit my YouTube channel. There are videos on this residential status. You can see that. Otherwise, just please wait for some time. We'll be learning residential status in detail.
Yes, thanks.
Okay, so don't worry, I'll be explaining you everything in detail. But right now, keep it in your mind. These are the options. These are the possibilities of residential status. Okay, possibilities are resident. Second possibility is a non-resident. Third one is resident, but not ordinarily resident. Three possibilities are there. Okay.
Okay, sir.
Yes, sir.
Okay, fine. Now, so I request all of you to visit to Income Tax Department's website and make yourself familiar with all these links. Again, I am taking you here, tax rates, charts, and tables. We are discussing about income tax rates. Now you see. Super senior citizen. Now you see, what is the tax rate for Hindu undivided family, HUFs? HUF, you know, is a separate category of person. Okay. Now you see, tax rates for assessment year 22-23 is like this. HUF up to 2,50,000, how much? Nil.
Nil, sir.
And this thing, 2,50,000 to 5 lakh, 5%. 5 lakh to 10 lakh, 20%. Above 10 lakh, 30%. Okay, above 10 lakh, 30%. So it is, you see, just like a normal individual, this is the rate applicable for HUF. And the same rate, which is applicable for individual, or which is applicable to HUF, is also applicable to AOP, BOI, and AJP. Okay. Is it clear to you?
Yes, sir.
Okay. Now you see so many types of assets we have covered. We covered individuals, HUF, AOP, BOI, AJP. Okay. What is the tax rate for company? R we have not covered. We'll be covering in due course. Okay. Now you see next category. Next, one more thing you have to understand. Here you see, if you see the tax rates and chart, you see there is one more item which is called as surcharge. You might be wondering what is a surcharge. Just like sales, I showed you one thing which is in addition to income tax you are paying at the rate of 4% flat. Okay, sales, we'll be learning that thing again. Then one more thing is also additional, but this is not payable by all. It is only payable when the total income exceeds a particular limit. Then only this is payable, which is called as the surcharge. What is this surcharge? This is again a tax on tax. Okay, whatever tax you are paying on that, you have to pay some additional amount. That is called as surcharge. Now you see what is the surcharge payable to different kind of surcharge payable by individuals, HUF and all. You see, for assessment year 22-23, are you able to see the rate of surcharge here? It talks about range of income.
Yes,
That means if the total income is 50 lakh to 1 crore, that means up to 50 lakh, there will be no surcharge. When we are applying these tax calculators, you have seen that we have calculated tax amount and cess amount, total amount is calculated. But surcharge amount was showing 0. This is because in that example that we have taken, 12 lakh rupees, that was below 50 lakh rupees. But when the total income will exceed 50 lakh and it will be up to 1 crore, surcharge amount is how much? 10%. If it exceeds 1 crore and up to 2 crore, what is the surcharge amount? Please respond. 1 crore to
15%.
if the range of total income is 2 crore to 5 crore, how much is the surcharge?
25.
25%. 5 crore to 10 crore or beyond 10 crore also, surcharge rate is usually 37%. That means if your total income is more, you have to
Yes,
pay
sir.
income tax. In addition to that, you have to pay surcharge. Okay, so surcharge starts above 50 lakh. Above 50 lakh, 10%. Above 1 crore, 15%. Above 2 crore, 25%. And above 5 crore, 37%. Okay. Understood? Above 50 lakh, how much? 10%.
Yes.
Above 1 crore, 15%.
Yes, sir.
Then above 2 crore, 25%. Above 5 crore, 37%. You want to check it? I'll take you to the income tax calculator again. So let me take you here, tax calculator. So you know surcharge starts at 50 lakh. Let me show you this tax calculator again. So same thing I'm taking you to assessment year 22-23. My taxpayer is an individual. Okay. You can take no. And male, female, you can take male. Residential status, you see resident. Now you see, I'm showing you, let us say total income, I'm showing you here 48 lakh. You're finding out this is the income tax. This is the health and education cess. Total, this much is paid. What is the surcharge? 0. Is it done? But you know, surcharge starts at 50 lakh. Let us say instead of 48, I'm writing 51 lakh. Now you see surcharge amount is there or not?
Yes, sir.
Okay. And this surcharge will be how much? What percentage?
Yes, sir.
What percentage?
But it's a 10%.
10%. Okay. And if it will be more than 1 crore?
Then it's a 15%.
More than 2 crore?
25.
Okay. So like this, you have to calculate. Okay. It is not, let us say you are taking 51 lakh. I'm writing, you see, 1 crore 51 lakh. Surcharge amount will change. A different rate surcharge rate will be applicable. But if it is below 50 lakh, you see, there will not be surcharge. Got it?
Yes, sir.
Now, friends, you see, surcharge concept you have understood. Okay. Then related to surcharge, there is one more concept which is called as the marginal relief. What is that? I'll be telling you subsequently. Now let us complete this rate part. Then we'll be seeing what is this marginal relief. Okay, you see this below surcharge, you see something is written about marginal relief. What is that marginal relief? I'll be explaining you later on once all these rates are over. Now you see, what is health and education cess? You are asking. You see, health and education cess is levied at the rate of 4% on the amount of income tax plus surcharge. So first you calculate income tax. On that, calculate if surcharge is applicable. So find out what is the income tax plus surcharge. On that, 4% will be levied as health and education cess. Okay.
Yes, sir.
Now,
Yes, sir.
one more thing, friends. Then, for resident individuals, individuals who are resident, there is one more concession. Okay. That concession is a rebate, you can say. That rebate is given under section 87A. Under section 87A, what will happen? If the total income of the assessee, who is a resident and individual, if below 5 lakh rupees, then 100% of the tax amount or rupees 12,500, whichever is lower, will be allowed him as a rebate. Understood what I said? You have seen the slab rates. On that basis, you are supposed to pay income tax. But if the assessee's total income is up to 5 lakh rupees, not exceeding 5 lakh rupees, that is up to 5 lakh rupees, then he is eligible to get a rebate under section 87A. 87A. What is that rebate? Rebate is that 100% of income tax or rupees 12,500, whichever is maximum, will be allowed as a rebate. Are you getting me? Now tell me, suppose someone is having an income of 5 lakh rupees, a normal individual having an income of 5 lakh rupees. How much tax he has to pay? Income tax on 5 lakh rupees. Up to 2,50,000 rupees nil.
Nearly, yes, 5%, sir.
Yeah, on 12 lakh, on 2,50,000 to 5 lakh. For this gap, he has to pay at 5%. So 5%
Yes.
of this 2.5 lakh, how much it comes?
12,500.
12,500. Therefore, what this 87A says, whatever is your income tax or 12,500, whichever is less, will be given you as a rebate. That means, suppose someone's income is maximum up to 5 lakh. His tax amount is 12,500, and 12,500 will be given to him as a rebate. Someone's income is not 5 lakh, let us say 4,50,000. His tax amount will be lower than 12,500 rupees. Okay, so what the section said, 12,500 rupees or lower amount, whatever is the tax. 100% of the tax amount or 12,500, whichever is lower, that will be given as a rebate. So he will be also given as a rebate. Entire tax will be also given as a rebate. Rebate will be given for the entire tax. Okay. So consequently, if someone is earning 5 lakh rupees and he is a resident individual, his tax will be always 0. Even if tax rate suggests there is a slab, but amount of tax will be 0. Okay. But the moment it crosses 5 lakh, then rates will be applied from 2,50,000 onwards. Okay. So let us check this magic now. Are you reading this provision? Once again, a resident individual whose net income doesn't exceed 5 lakh rupees can avail rebate under section 87A. This is deductible from the total income tax before calculating education cess. The amount of rebate is 100% of the income tax or rupees 12,500, whichever is less. Okay, friends. Now let me show you that concept. Let me once again take you to the tax calculators. Okay, here is my tax calculator. I told you about resident individuals. I am selecting assessment year 22-23. My taxpayer is an individual. He is not opting for the new scheme. Under new scheme, this rebate is not allowed. Let us say he is a male. Residential status, what should I choose here? Residential status?
Resident.
Resident. Let us say his total income is 5 lakh. So according to slab rates, he has to pay 12,500.
Yes, sir.
Is it not? But if you click here, 5
Yes,
lakh
sir.
enter, you see there is no tax. Why there is no tax? Because it says it calculates income tax after relief of 87A. There is a tax, but after relief of section 87A, it is 0. Okay. Let us say someone is having income of below 5 lakh, let's say 4,50,000. Then also 0. Understood why it is 0? Because we are calculating income tax after allowing this relief under section 87A. But what you have read there, that this rebate will be allowed only when the total income is not exceeding 5 lakh rupees. Meaning, when the total income is up to 5 lakh of rupees. Now you might be thinking, what will happen if you write 5 lakh and 1, you see? What will be the tax? Can you guess? Now you see, under 5 lakh, he is paying no tax, is it not? But if it is 5 lakh 1, you see tax is how much? He has to pay 13,000 rupees. Now tell me, would you like to earn more than 5 lakh rupees or will you like to earn less than 5 lakh rupees?
So
Suppose you got two options. Suppose you got two options. Instant. You have to earn either 5 lakh rupees or 5 lakh 1,000 or 5 lakh 10,000. What you would prefer?
5 lakh.
5
If you
lakhs,
prefer
sir.
5 lakh rupees. You see, okay, that is, you can find out there is a weakness in law. Okay, if you earn even 1 rupee more than 5 lakh rupees, then effectively your income will be lower than a person who is earning 5 lakh rupees because there is a tax outgo. Okay, so being law students, you try to understand there are weaknesses. Okay, there are loopholes in the law.
So I have a doubt.
Yeah, yes. Tell me.
So in calculating, you showed 5 lakh 1,000 rupees. So it was tax amount was coming 12,500.
Yeah.
So, but in that tax rate slab, if more than 500, 20% rate was there. So why not 20% of 5 lakh?
Now, I couldn't follow on 5 lakh. What is how you are calculating? What should be the tax amount according to you?
So in that rate slab, it was written that above 5 lakh rupees and between 5 lakhs and 10 lakhs rupees, 20% will be calculated.
Yes,
The difference.
100% right.
So why it was calculated 12,500?
Oh, your point is that on that 1 rupee extra, why
Yes.
20% was not calculated? Fantastic question. Friends, when I had explained you the concept of total income, have you remembered? Total income. Let me show you that slide. One more thing at that time I had told you. Let me show you that slide. It will be clear to you. Okay. Now, total income concept we have understood.
Yes, sir.
Now you see. Once again, I'm showing you. This is how gross total income is calculated. Now, total income. Can you read here the last line? Can anyone read it?
Upward rounding up to nearest rupees 10.
What does that mean? That means your total income will be rounded up to nearest rupees 10. So when you are saying that 5 lakh and 1, that will be
5 lakhs.
5 lakh.
Okay.
Got it?
Yes, sir.
Fine. Okay, but very valid question you asked. Okay, so that is the reason. Now you have understood what is the
Yes,
problem
sir.
in earning slightly more than 5 lakh rupees. You have to pay tax. And there is no marginal relief in this kind of situation. What is marginal relief? That is another thing. Okay. That will be understanding when we are learning the concept of surcharge. Surcharge is another area where a person might have to pay more. You know, in case of individual, what happens? If the total income exceeds how much? 50 lakh rupees. Okay, he has to pay a surcharge. Yes or no?
Yes, sir.
That means a person who is paying 50 lakh rupees, who is earning 50 lakh rupees and a person who is earning 50 lakh rupees and 100 rupees, 50 lakh and 100. There will be a difference in tax because the person who is paying slightly more than 50 lakh, he has to pay surcharge. Yes or no?
Yes, sir.
But in that case, what has happened? Law has allowed a marginal relief. In that case, relief will be allowed. Effectively, he will be paying the same amount of tax. The marginal relief will be allowed in such a way that the additional tax he has to pay will not exceed the additional income. Suppose someone is earning 50 lakh rupees and another person is earning 50 lakh rupees and 100. The maximum additional amount, that means maximum amount of surcharge, can be 100 rupees. It cannot be more than that. Okay, why it will be so? Because that person will be allowed a marginal relief. That is provided in the law in case of surcharge. But the same type of marginal relief is not allowed here when income exceeding 5 lakh. Okay, friends, I'll be once again explaining you the concept of marginal relief. Okay, here let us take a break for 5 to 10 minutes, then we'll catch up. Okay, is it clear up to this?
Yes, sir.
Yes,
sir.
Thank you. Thank you. We are taking a break here. Yes, friends, welcome back. We were discussing about rates of tax, and in between one issue came that in case of individuals, why slab rate is applied, and in some other kind of assesses, why not slab rate? You can see flat rates are applied. Friends, that is the law. And since that is the law, we cannot challenge it. Law has prescribed for individual slab rates. That means if somebody's income is, let us say, 30 lakh rupees, then up to, in that income, up to certain amount, there will be no tax. And next level, there will be 5%. Next level, there will be 20%. Next level, it will be 30%. Like this, it will be taxed. But if you refer to some other kind of assesses, let us say company assessee, so flat rates will be there. Slab rates are not there, and there is no basic exemption limit also. Okay, so lawmakers of our country have thought, maybe must have carefully thought that this kind of assesses where slab rates are relevant, slab rates are required, and for other kinds of assesses, slab rates are not required, flat rates are required. So that is the law. We have to follow that. Okay, so many things we have discussed. Now, other assesses we'll be discussing. Now, quickly, let me share some slides with you, which you have already seen. Most of these slides you have already seen. Not slides, but the concepts we know. But coming to rate of tax, just a minute, friends. Yeah. Friends, when coming to rates of tax, earlier also I had told you, these are the rates of tax which are normally prescribed in the Finance Act, except there are some specific rates which are prescribed in the Income Tax Act. And what is relevant here is the Finance Act for the relevant assessment year. Okay, suppose we are, this is, let us say, assessment year is 2021 or 21-22. Now here we are taking assessment year 22-23. If 22-23 is the assessment year, you have to see what is the Finance Act relevant to that assessment. We have to refer to that Finance Act to consider the rate of tax. And gradually we'll be learning the rate of tax. You can find it out in the Finance Act 2021. You can also find it out in the Finance Act 2022. Okay, so for the assessment year 22-23, the relevant Finance Act is Finance Act 2022. That is Finance Act 2022. Okay, so we'll be seeing how rates of taxes are mentioned in the Finance Act. But there is one more section, section 294. It says, in case any delay in passage of Finance Act, Finance Act comes on a particular date. But after that, what happens? It is debated and finally it is passed by both the houses of Parliament. Then it goes to the President, it receives assent of the president. When the president signs it, after that it becomes law. So in case there is any delay in passage of Finance Act and income has to be assessed, then what will happen? This provision says, section 294 says, in case of delay in passage of Finance Act, either the provisions of Finance Act in force, that means the earlier Finance Act provisions, or the proposed finance bill, which is more favorable to the assessee, shall be applied. Okay, so you see, in the month of February, Finance Bill 2022 will be coming, and you will find it out. It will take some time for passing of this act. But if the passing gets delayed, then the previous Finance Act, that means Finance Act 2021, or the proposed Finance Bill 2022, whichever is more favorable to the assessee shall be applied. Let us say assessment has to be completed, but the new Finance Act has not been passed. Then what will happen? Whichever is more favorable to the assessee, that will be applied. Okay, friends, understood? Yes or no?
Yes, sir.
Okay. Now you see. To understand the entire concept of income tax, it is not that we'll be only focusing on the Income Tax Act. We have to read the Income Tax Act. Also, we need to read some of the provisions of Annual Finance Act. In addition to that, income tax rules are passed by Central Board of Direct Taxes. Income Tax Act has authorized CBDT, that is Central Board of Direct Taxes, to pass income tax rules. These rules are also relevant. And in addition to that, there are circulars, notifications, clarification, which are issued by Income Tax Department from time to time. They are also relevant. And in addition to that, legal decisions, various courts give that decision. Those decisions are also relevant, which if you have control over all the 5 aspects, then only we can understand the Income Tax Act in complete form. Right. So Income Tax Act 1961, Income Tax Rule 1962, Finance Act of the relevant assessment year, then clarifications, circulars, notifications, which are issued by time to time, and these are issued by CBDT under the power given under 119 of the Income Tax Act 1961, plus judicial decision. So we are supposed to learn all these things. So every year budget is presented. Here also after a few days budget will be presented. The finance minister will be presenting the budget. This is a photograph of the last budget. This time budget has not yet come. Some of the provisions of Income Tax Act of this thing, tax rates I had told you right now. Now let us see. Now budget is expected in few days. So this time I expect all of you to watch the budget speech of the finance minister. And if for some reason you are unable to watch it, then what you can do, at least read the budget from any financial newspaper. That I think you will be able to do it, so that you will be having complete idea about how revenue is collected and what are the tax rates, everything. You will have a brief idea. Okay, either you watch it so that very quickly you can grasp, or you can read any newspaper, everyday financial newspaper when budget is discussed in detail. Now I'll show you what is the structure of budget. Now, are you able to see this chart? This picture, are you able to see?
Yes, sir.
Now,
Yes,
I
sir.
will look at this thing. Every finance bill. Finance bill contains so many things, you know. But what is important for us is the first schedule to the finance bill. So, you know, in Acts contains schedules. This first schedule is more important because tax rates are contained in that first schedule. So this time when you are after budget, you can download the budget. It is freely downloadable. You can download the finance bill, and in the finance bill, you can see after the normal provisions of the finance bill, you can find the certain schedules are there. And please watch the first schedule of the finance bill. This is the first schedule which is attached to the finance bill. If you look at here, these finance bills are also, entire bill is published in many newspapers. You can read it there. If you see the first schedule, it has got 4 parts: part 1, part 2, part 3, and part 4. Okay. And if you see the part 1 of the current finance bill, which is coming, which is not yet come, but will be coming. This time you watch it carefully. Part 1, it talks about what? Can you read it? Income tax rate for various assesses for current assessment year. That means for the assessment year 22-23, whatever is the income tax rate, that will be there in which part? Part 1 of first schedule. Okay, understood?
Yes, sir.
For various assesses, for assessment year 22-23, what is the tax rate? It will be there in the Finance Act. Finance Act 2022, which has not yet come, but will be coming. When it will come, please verify this, whether it is contained there or not. First schedule, past part 1. This is relevant for us. And what is part 2? Part 2 will be talking about tax deducted at source rates. There are certain income on which tax has to be deducted at source. That means person who is paying that income has to deduct tax. Okay. So TDS rates for various assesses, that is for tax deduction rates for various assesses for current financial year. That means for financial year 22-23. So budget is coming in February. Financial year will start from 1st April. So before that, what will be the TDS rate? At what rate tax has to be deducted? That rates are also mentioned in this budget. But in which part? Part 2. Got it?
Yes, sir.
Yes, sir.
Now, part 3 is extremely important for us. Part 3 talks about various things. One is TDS rates for salaries, employees, what will be the tax rates, plus advance tax rate for current financial year. Current financial year means financial year 22-23. 22-23, what is the advance tax rate? And also, that is the rate for 22-23 advance tax rate means that is for assessment year 23-24. That means for the next assessment year. What will be the rate? That is prescribed here in part 3. Okay, for 23-24 assessment year, what will the income tax rate? That will be there in the part 3 of first schedule to finance bill. Understood?
Yes, sir.
Yes, sir.
23-24 assessment year, which has not yet started. It will be started on 1st April 2023 and ending on 31st March 2024. But what is the rate applicable to that assessment year? That is also informed to you much advanced, much before. Okay, but next year, when the next budget comes, next budget means Finance Bill 2023, okay, or Finance Act 2023. When that will come, you'll find out this part 3 of earlier years, that is part 3 of 22 budget, you'll find this will be copied and pasted here. Okay, that means part 3 of a particular finance bill become part 1 for the next finance year. That is what I am saying. Now we are learning rates for 22-23. Is it done? We are learning income tax rates for assessment year 2023.
Yes, sir.
But Finance Act 2022 has not yet come. Then how we are learning it? We are learning because these rates are already there in the form of advance tax in the Finance Act 2022. It is already there. Current rates have not yet come. But in the last finance bill, it was there as part 3. Now the current finance bill, that will become part 1. So every year, the part 3 becomes part 1. Part 3 of the previous finance bill becomes the part 1 of the current finance bill. And next assessment year, the 22-23 rates are mentioned in part 3. So after February, we will be also able to know what is the income tax rate for assessment year 23-24. That also will be able to know. But we will be able to know, but that will be contained in the part 3, not part 1. That means that will be contained as advanced tax rate or TDS per salaries as that rate. But once that is advanced tax rate, next year that will become the current year's tax. Current year's tax rate. Is it clear to you? Did you understand the structure of budget? What is part one? What is part two?
Yes. Yes, sir.
Okay. So in this budget year, if you find some changes in tax rate, please understand these changes in tax rates are not applicable for assessment year 22-23 because the changes will happen only in part 3, not in part 1. Part 1 is already decided. What was the last year that has been copied and pasted? Okay. So if there is some changes in income tax, try to understand. Let us say slab rate is not 2.5 lakh. The basic exemption limit is not 2.5 lakh. Up to 5 lakh it is exempt, but some changes have happened. All these changes will be relating to assessment year 23-24. Okay. Are you getting?
Yes, sir.
Now there is one more part to the first schedule, that is part 4. That is rules for computation of agricultural income. How income tax, how agricultural income will be indirectly. It is agricultural income, since that is not a central government subject. Central government cannot levy tax on it. But in certain situations, agricultural income also gets clubbed with your non-agricultural income only for tax purpose, tax rate purpose, rather you can say. That means in some situation, agricultural income will be clubbed with non-agricultural income. And because of that clubbing, assessee will be moved to a higher tax rate slab. After that, agricultural income's tax amount will be deducted. We'll be learning that process. Agricultural income is not taxable, but it will be added for tax purpose, for tax rate purpose. So that is that rules prescribed in part 4. But what is more important for us is these 3 parts: part 1, part 2, and part 3. Okay, and please read the last part. Part 3 of first schedule generally become part 1 of the subsequent finance. Okay, I think now you will be showing some interest to what's the budget, how budget looks like, how finance act looks like. You can see what is there in part 1, what is there in part 2, what is there in part 3. And next year, if you cross check, you can find out exactly what was there in part 3 that automatically become part 1. So therefore, even if now tax law has not been passed, but rates are already published, we know at what rate tax has to be paid for the next assessment year. Is it done? Therefore, when you're showing you the rates and taxes, you are seeing 2 rates, that means 22-23 and 21-22 rates are also there. 21-22 rates are there in the part 1, 22-23 rates are there in the part 3. Okay, so we are learning in advance purpose because once this after 31st March, the old rates will be irrelevant. So therefore, no point in reading the old rates. So therefore, we are learning little advance, even if Finance Act has not yet come, but we are learning the tax rates in advance. Understood the structure of finance bill?
Yes, sir.
Okay. Have a look at this picture. Once again, you can have some idea that how part 1 looks like, how part 2 looks like, or part 3 looks like. Now, what are the content of these 3 things? Now, these are the slab rates which I have already discussed earlier. I have shown you from the chart. Now see it in the slide. So this is the rate applicable for individuals, AOP, BOI, or AJP for assessment year 22-23, men and women below 60 years. You can see it up to 2.5 lakh nil, then 2.5 lakh 1 to 5 lakh 5%, then above 5 lakh up to 10 lakh 20%, above 10 lakh 30%. And you have already seen rebate under section 87A is applicable. Surcharge will be also levied on income tax. This will be subject to, surcharge will be subject to marginal relief that will be learned. And you see what is this? Health and education says 4%. Will be levied on what? Income tax plus surcharge. So first compute income tax. add surcharge on that if applicable. Then you will be getting IT plus surcharge. On that thing, 4% you have to add, which is called as health and education cess. Got it?
Yes, sir.
There is one more concept that is called as alternate minimum tax. Not now, in appropriate time, we will be learning that. Okay. AMT is applicable, alternate minimum tax will be learning. Now, next thing is that senior citizen. That means who is of the age of 60 years or more at any time during the financial year, but less than 80 years of age. Here you see the basic exemption limit moves to from 2.5 lakh to 3 lakh rupees. Other things are the same. Rebate is allowed to them if income is up to 5 lakh rupees. Surcharge, above 50 lakh, when income will be there, surcharge will be levied. But the surcharge will be subject to marginal relief. And health and education cess will be 4% of income tax plus surcharge. AMT is also applicable. We'll be learning it at appropriate time. Right? Understood? Senior citizen. Now coming to very senior citizen, who are of 80 years or more of age at any time during the financial year, up to 5 lakh, no tax. Then 5 lakh to 10 lakh, 20%, above 10 lakh, 30%. Rebate under section 87A is applicable. Surcharge is applicable on IT if the total income exceeds 50 lakh rupees. And that surcharge will be subject to marginal relief. Health and education cess will be 4% on income tax plus surcharge. AMT is also applicable. AMT stands for alternate minimum tax. We'll be learning that. Okay. Now, if you have a look, this is the comparison of basic exemption limit of all the three categories: normal individuals, super senior citizen, and senior citizen. So rates might be nil, 5%, 20%, or 30%. Okay, surcharge will be calculated on income tax. Okay, surcharge will be on IT. First calculate income tax. On that income tax, surcharge will be calculated. Suppose it is 10%, 10% on income tax. Cess will be 4%, but cess will be calculated on income tax plus surcharge. Rebate under 87 of 2 rupees 12,500 if the total income does not exceed 5 lakh. The moment it is 5 lakh and 1, then surcharge will not be calculated. Sorry, rebate will not be calculated on section 87. Because it is exceeding. When it does not exceed, that means up to 5 lakh rupees, this rebate is allowed. What is AMT? We'll be learning it. Now, did you understand up to this rate of tax surcharge concept? Is it clear to you?
Yes, sir.
Now
Yes.
tell me, if surcharge will be applicable, on which amount we are going to calculate surcharge?
The income
So,
tax.
income tax.
Okay, on what amount we are going to calculate cess, health and education cess?
On surcharge
4%.
and income tax.
So
Yeah,
on
surcharge
first
is
calculate
4%.
income tax by applying slab rate. Then on that calculate surcharge if it is applicable. If it is not applicable, take surcharge as 0. Then find out what is IT plus surcharge. On that amount, calculate our health and education cess, which is 4% flat. Health and education cess is 4%. Surcharge may differ depending upon the total income amount. Now, friends, now have a look at the provisions of rebate under section 87A. I had already told you. Now read the exact provisions. If you see here, it says an assessee being an individual resident in India whose total income doesn't exceed 5 lakh rupees shall be entitled to a deduction from the amount of income tax as computed before allowing the deduction under this chapter on his total income, which he is chargeable for any assessment year of an amount equal to 100% of such income tax or an amount of 12,500 rupees, which is less. That means if the total income doesn't exceed 5 lakh rupees and the person is an individual, that too is a resident in India, he can get this deduction. How much of deduction? Equal to 100% of the income tax. That means entire income tax or 12,500. Whichever is lower. That is the deduction amount. Okay, now you can see total income is less than equal to 5 lakh rupees, deduction up to 12,500 one can get. Okay.
Yes, sir.
Right. Is it clear about rebate? How rebate will be calculated? Now coming to surcharge. Surcharge amount varies depending upon the type of income, depending upon the amount of total income. Now you see, it will be applicable only when the total income exceeds 50 lakh. 50 lakh to 1 crore, 10%, 1 crore to 2 crore, 15%, 2 crore to 5 crore, 25%, above 5 crore, 37%. You have seen the same thing from the rates and charts, is it not? So that is the source.
Yes, sir.
This is the source. This particular slide is copied from that place. Okay. So you can refer to directly to the source also. Okay. Now. Yeah. Now, this is about when you're this thing feeding data in the tax calculator. You know, there was a question that whether you are opting for section 115 BAC or not. Is it not? There was a question or not? And we opted for no. How you remember?
Yes.
Yes,
I
sir.
told you,
Yes,
that, I
sir.
told you that is the question that whether you are opting for new scheme or old scheme. And that new scheme concept has started from assessment year 21-22 onwards. And that is also relevant for assessment year 22-23. Okay, for assessment year 22-23 also same option is there. You can assess once, you can opt this scheme. So if you see what this scheme suggests, now you see this is an optional new income tax regime, also applicable for assessment year 22-23. It was also there for assessment year 21-22. This is the second year of this scheme. Okay. To whom it is applicable? It's applicable only to individuals and HUFs. Okay. And under this scheme, what has happened? That slab rate have been significantly reduced. You have to pay tax at a reduced. But it has got a cost. Cost in the sense certain deductions and rebates will not be allowed. For example, that 87A rebate you have seen, that will not be allowed. Like this, many deductions and rebates are there, which will not be allowed. We'll be discussing all of them. Now, if you see this new tax rate slab, you see this is the slab. Are you getting it? Up to 2.5 lakh exempt. In the earlier scheme also that was exempt. For 2.5 lakh to 5 lakh, earlier scheme also it was 5%, here also 5%. But next, after that 5 lakh, it is jumping to 20%. Is it not? Tax rate in the old regime was 20%. But here you see 5 lakh to 7.5 lakh is 10%. 7.5 lakh to 10 lakh is 15%. Above 10 lakh, in earlier scheme it was 30%. But here you see above 10 lakh up to 12.5 lakh, it is 20%. 12.5 lakh to 15 lakh is 25%. Above 15 lakh, only it is 30%. Okay, understood?
Yes.
Right. Now, if you do that, if you go for the new scheme, you can see these are some deductions which one will not be able to get. Some of the deductions may not be able to understand at these keys because you have not learned those chapters. But still, let me give you some brief idea. One is that every salaried people get a standard deduction of 50,000. If he opts for new scheme, he cannot get it. Then travel allowance deductions are allowed. under section 10(5), one cannot get it. House rent allowance, certain allowances which are mentioned in section 10(14), that will not be allowed. Okay, a person who has taken a housing loan was able to claim deduction for interest of ₹2 lakh. That also you cannot claim if you goes for the new scheme. Okay, similarly, this chapter 6 deduction, which is normally up to ₹1,50,000, and for NPS, if you include another ₹50,000, these are again deductions which are allowed that one cannot get under new scheme. Similarly, deductions made for certain donations made to some eligible entities who have registered under 80G section of the Income Tax Act. So that deduction for donation, one will also not be able to get. Similarly, interest for paid on educational loan, that amount will not be deducted. Interest and on saving bank account under section 80 DTA, ₹10,000, 80 TTB, ₹50,000, this kind of certain deductions which are allowed. Under new scheme, one will not be able to get it. So in fact, one has to compare that what will be the tax liability under new scheme or under old scheme, and whichever is beneficial, one may choose that. Okay, it is difficult to say at a particular level of income which regime or which scheme is better. Okay, maybe new scheme may be better if the person is not having much investment, but he is not eligible to claim some deduction, then he may claim new scheme. Okay, otherwise old scheme, when he can claim some deduction, he had made some investment, will be eligible to avail some deductions, then old scheme might be better. Okay, so one has to analyze all these things in detail. So what we can do right now, once again show you that tax calculator. Okay, you are seeing this tax calculator now?
Yes, sir.
Now you see, here I am doing, here I have, let us say I am putting a figure of 15 lakh. 15 lakh, if I'm saying no, 150 BCB, BSc no means I'm going old scheme. Old scheme, what is the tax amount you find out? 2,73,000. Okay. If I say no, I'll go for the new scheme. I'll write S here. It comes to how much? 1,95,000. Is it not? So it appears that new scheme is better. Is it not? Yes or no?
So for higher tax rate, those who are paying tax amount for higher income, amount of income and all, so they can pay tax at a lower rate. So for them, prima facie, it may appear beneficiary, but also like you said earlier, they won't be getting other certain benefits. So
Yes.
like we
That
say
is why.
in Hindi, घूम फिर के वहीं फिर वापस.
Okay, right. So, okay, so that is why we are saying that directly we cannot compare like this. Suppose I'm 15 lakh, I'm saying this is as per new scheme. New scheme is 1,95,000. If I choose it for old scheme, it is 2,70,000. So you may feel new scheme is better, but directly you cannot compare because the net taxable income figure will change. Okay, suppose what is the taxable income or what is the total income? Total income is what? After allowing all these deductions, after allowing chapter 6 deductions. Suppose that means when I say total income under the old scheme is 15 lakh, under new scheme, it may be 17 lakh. Because you might have deducted under chapter 6 around 1,50,000. You might have deducted a standard deduction. So all these things will not be allowed. So under new scheme, what will happen? Income tax rates are low, but total income will be higher. Okay, you cannot apply the rate on the same 15. But on the old scheme, income is lower, but rates are more. New scheme suggests higher rate, but at a new scheme, I'm making 3 columns for you. One is scheme, that is total income. What is the tax rate? If you go for old scheme, my total income will be lower. Why it will be lower? Because I will be claiming some deductions, some rebates. Okay, suppose I have salary income 50,000 rupees, I have claimed standard deduction. Okay, from my income from other sources, I have claimed section 80 TA. From my housing income under the head income from house property, I have claimed interest paid on borrowed capital. Maybe I might have claimed 2 lakh. Okay, and chapter 60 deduction, I might have claimed, let us say 1,50,000. So consequently, my total income suppose is 10 lakh rupees. But if we ignore all these things, my total income may become 13 lakh rupees. So under old scheme, my total income will be less and my tax rate might be more. And under new scheme, total income is more and my tax rate will be less. Tax rates are less, but when you compute, your total income will be more. So therefore, you have to compute the total income of both the situations. Then you apply the calculator and you will find out which scheme is better for you. Is it clear to you?
Yes, sir.
Okay, so therefore, straightway we cannot compare. We have to actually find out which scheme is better. Okay, so this is just like one comparison, but this comparison are based on certain assumption. This is the tax rate. You see, this is a one comparison on the basis of certain assumption. Okay, after applying something, here it is assumed that there is a reduction of 2.25 lakhs, so like this. So actually, we have to arrive at the total income. Then only you should compare and find out which scheme is better. Okay, understood up to this?
Yes, sir.
Now,
Yes, sir. Yes.
so individuals, HUF rates you have got. You may have a quickly look at this rate, which is applicable to farms and LLP. You can see the tax rate for farms and LLP. There is no slab rate, only a flat rate is there. What is that rate?
30%.
30% will be levied, and there will be surcharge. Surcharge is 12% if the total income tax, 12% of income tax if the total income exceeds 1 crore, and it is subject to marginal relief also. Cess will be 4%, which will be calculated on income tax plus surcharge. AMT will also be applicable. That will be seeing it. Now, just have a look at this tax chart once again. This individual tax rate I had shown you. Okay, special rates for individuals, if you see, that's what I'm talking about. Okay, this new rate you see, this is from assessment year 21-22 onwards. This new rate is applicable. Surcharge we have seen for individuals. Now you see partnership farm. You can see for the assessment year 22-23, farm including LLP rate is 30%. Surcharge is 12%. Health and education cess is applicable. Okay. For local authorities, tax rate is also 30%. Surcharge is applicable just like a partnership farm. Health cess is also applicable just like a partnership farm. That is the tax rate for local authorities. Okay. Now you have almost completed the tax rates for individuals. Two possibilities for HUF. Okay, plus AOP, BOI, HAP, those are also covered. Then farms, flat 30%. Local authorities also flat 30%. Now, one important area is there, tax rates for corporate entities. Okay, how tax will be computed, and they'll be also subject to one more thing called as minimum alternate tax. So this corporate entities, these tax rates will be learning in our next session. Okay, we'll stop our class here today. Next session, we'll be learning about tax rates which is applicable to companies. Okay, friends.
Okay, sir.
Yes,
Okay.
sir.
Yes, sir.
Thank you very much.
Thank you so much, sir.
Thank you, sir.
Thank you, sir.